Hello and welcome back to Andersen podcast series Everything Tax. And today we are here to discuss very important topic, that is Ministerial Decision 97 on transfer pricing. And besides the Ministerial Decision, we also going to discuss about and unwind the TP guide that have been issued by Federal Tax Authority to bring more clarity. And to discuss this important topic today with me is Mankush Soni, who is a Senior Manager Corporate Tax with Andersen UAE. So welcome, Mankush.
Thanks,
and
Anurag.
let's delve into this very important topic. And I think everybody needs a lot of clarity in relation to transfer pricing.
Yes, absolutely.
So my first question to you, Mankush, is the domestic TP. We talk about domestic transfer pricing and its applicability and threshold. So whether the transfer pricing applies on domestic transactions, and is there any threshold in relation to this?
Good question to start with the UAE transfer pricing law. And when we come to domestic transfer pricing regulations, so as of now, to all the expectations that were there by all the industrialists, clients and everything in the industry, they were hoping to get some relief or either get some materiality threshold for domestic transfer pricing regulations. But unfortunately, there is no threshold as such. And UAE guidelines as well as UAE TP law, they have specifically mentioned that all the transactions with the related parties or the connected person, be it cross-border or domestic, they have to be undertaken on an arm's length basis. So there is no respite given to the taxpayers, unfortunately, when it comes to the domestic transfer pricing, and no threshold has been prescribed as of now.
So which means even I do a transactions of 10 dirhams or 100 dirhams with the related party,
yes,
then I need to abide by the transfer pricing guidelines.
Absolutely. There is no threshold, to be honest.
Wow, that's
Yes.
very important. The another question that everybody want to know about the transfer pricing for member forming a tax group. So, I mean, the normal notion is there when people have seen the VAT implemented itself, they say that if you supply within the group itself, then you need not to maintain any sort of transfer pricing
Yes.
or you need not to charge VAT. Is that so applies within the corporate tax and transfer pricing perspective as well?
This is one of the most critical and important aspect, and it's a hot topic in considering the UAE transfer pricing regulation. When we talk about the related party transactions between the members forming part of a tax group. So to be honest, the law says Article 42 of UAE TP law or CT law states that, the transaction between the member of a tax group would be eliminated. But nothing specifically has been mentioned or nothing specifically has been stated in the law that they don't need to adhere the arm's length principles. So for businesses, it is very important that even if they are planning to form a tax group, they need to still ensure that the members forming part of tax group, the intercompany transaction between them are to be undertaken on an arm's length basis. And in order to say that Ministerial Decision 97 also states that even the domestic transactions between the UAE taxable person at the same tax rate of 9%, although they need not to be disclosed in the local file when it comes to documentation, but they specifically mention that they need to be undertaken on an arm's length. So one implication or one inference can be drawn with such UETP guide or UECT law that, transactions between members of a tax group may also be undertaken on an arm's length basis. And it is advisable, suggested and recommended for all the businesses to make sure that, they have the TP policies in place. So in order to say that in future, if any of the member wants to exit from a tax group, then they anyway have to undertake the TP policy, arm's length mechanism and everything. So better not to start from the first tax period itself when they are forming part of tax group and not wait for, authorities to come and question them when they exit from a tax group or when there is any specific scenario.
Very important aspect. So you said that within the tax group also the members forming tax group, they need to ensure that they're compliant with transfer pricing.
Yes.
Wow, that's quite interesting.
Yes.
And you touched base important topic that, transfer pricing policy.
Yes.
I mean, I go and meet a lot of clients out there and everybody is so apprehensive about this documentation because every meeting, every impact assessment that we go and talk about it, everybody talks about that in the corporate tax world, you need to maintain a lot much documentation.
Correct.
So what this documentation is all about? What kind of documentation that somebody need to maintain in relation to transfer pricing?
So very important, I think, Anurag, documentation in transfer pricing is considered to be the backbone for all the entities who are having the related party transaction or transaction with the connected persons. So it is important to have all those documentation in place. So UECT law has specifically mentioned 3 types of documentation that every taxable person need to undertake or need to maintain. One is the local file, then is the master file, and third is the transfer pricing disclosure form. I'll talk about local file and master file. There is a threshold, there is a relief given to taxpayers, UAE taxable person, that if your standalone revenue exceeds revenue threshold of AED 200 million dirhams, then only you are applicable to prepare and maintain a local file or a master file. Okay. Or even in that case, if your standalone revenue does not exceed AED 200 million dirham, but if you're forming part of the M&E group, wherein the console group revenue exceeds 83.15 billion dirhams, like just to say the BEPS Pillar 2 implications, taking into account the same revenue, then also you need to prepare a local file and a master file. So considering the threshold is very big when you see a UAE taxable person into account, but I would still say that the relief may be taken away from the UAE taxable person if they are forming part of the M&A group. So they need to ensure that the documentation is in place, and even if there is no requirement as such to prepare a local file or a master file, then also it is recommended to have at least an internal memo in place, because FTA, as and when the audit assessment starts, the FTA may ask for any such documentation which can support the arm's length pricing of all the related party transactions that a group is undertaking between the related parties.
And tomorrow, per se, let's say you said 200 million is the limit. Tomorrow, let's say in the year 2 or year 3, the limit goes 250 or 300 million. It means they come within the ambit of local master file.
Correct.
At that stage, will it be applicable for them in the year in which they have the turnover less than 200 million?
No, not. The law clearly says that even only when the threshold exceeds or breaches that standalone revenue of 200 million dirham, only then the transfer pricing documentation regulation would be applicable, and only then the local file and master file would be required to be maintained.
Very important. Now, my another question is that which every business worries about it, and that is a word called benchmark. Every time I go out there, it's very hard to explain.
Yes.
Why this benchmarking is.
Yeah.
Why this benchmarking is so critical in the arm's length pricing.
Correct.
And how to do benchmarking, where all references should be drawn from, how often this references should be drawn from. Is it every year, every 5 year, or what actually goes around it? So if you can touch base on benchmarking per se.
Correct. So one thing is to undertake a related party transaction. Second is the arm's length price that you are undertaking between the group entities. And third comes the justification of that arm's length price. To justify that arm's length price, that is the price between the related parties of the group are at fair market value or is at an arm's length basis, benchmarking is the only tool or only criteria which comes into picture wherein we can actually justify that how that price is at arm's length. Now there are so many databases to prove that, or to carry out a benchmarking exercise wherein we actually find out the third party independent comparables who are actually operating in similar industry, like our local entity in the UAE, carrying out similar or broadly similar kind of functions and performing similar kind of activities. So by doing all these filter and qualitative and quantitative filter, we select some comparables, find out the arm's length range by taking into account the financial information. But when it comes to the benchmarking, the TP guide has also provided one more relief to the taxpayer. They have said that you don't need to carry out a benchmarking exercise on a year or on a year-to-year basis. You can carry out a benchmarking once and then can do that exercise after every 3 years, provided you carry out the updation of the financial numbers. So this is one of the most welcoming step by the UAE Transfer Pricing Guide, and also it would provide a much needed relief for the taxpayers in order not to get into all the year-on-year benchmarking exercises for all the related party transactions.
So why it is so complicated? I mean, it's very hard for somebody to understand that I'm doing transactions at the market price, which means for me as a normal layman to understand the price at which I sell to third party, I sell it to my related party as well. Now, do I still need to do this benchmarking? And
Yes. So local, Anurag, I'll just take a step backward. So when we talk about local file involves one of the key elements which takes into account your economic analysis along with your functional analysis. Economic analysis comes into picture, which involves or encapsulate all the benchmarking process, the search that you have carried out to justify the transaction which were done between the related parties are at arm's length or at fair market value. In order to find out that we have done the transactions with the related parties, considering that we would have done it with an independent enterprise in an open market, a benchmarking exercise comes into picture. So transfer pricing authorities, in my experience while doing in India landscape, which is one of the most complex jurisdictions, benchmarking has always been challenged by the TP authorities. No wonder you carry out the transaction, undertake those transactions, justify that the transaction is at arm's length. They will still ask for the benchmarking document, which is one of the key backbone areas of a transfer pricing documentation, which we normally here in UAE call it as a local file.
Wow, that's very interesting. So for our viewers, it's very important to understand that though your transactions with the related parties are at market price, presumably it's market price, even then you need substantiation document in relation to this particular transaction, which need to be benchmarked in the same economic circumstances and relatable attributes out there. And then that study need to be kept along with your transactions in order to establish years later when the litigation begins, right, to substantiate.
And I will also like to add one more point in benchmarking, the practical limitations that we at Andersen also, when doing the benchmarking exercise for all our clients at the time of devising TP policy and impact assessment stage as well. One practical limitation that almost all the consultants are facing, and although even the clients are also facing, is to find out the correct and appropriate comparables. Because this market is very new, TP is very immature at the moment and is still in a very nascent stage. It is very hard to find out the appropriate comparables. And to cater that limitation, the TP guide has specifically provided a relief wherein they have said that even if you are not able to find out the local comparables while carrying out the benchmarking analysis, you can give preference to your regional comparables, which is the Middle Eastern region. And then if regional comparables are also not enough, then you can go ahead and expand your search and find out other regions also and cater those comparables in your search. So this is, I would feel that this is one of the practical solutions that TP Guide has provided, because as a consultant, we ourselves have faced a lot of challenge in carrying out the benchmarking exercise.
I think that's a very, very fair point out there. I mean, and that relief is really, really welcoming because it's a new regulation.
Exactly.
So the data and information may not be available to the extent required. So we need to look into the the broader
Bigger
region
picture,
and then global picture. As such.
Absolutely.
So my next question to you, Mankush, is that we see a lot of global multinationals operate in the region out there.
Correct.
And for them, the transfer pricing is not something very new topic.
Yes.
And for them, it's like a kind of a mechanism and a process that they're living for years, considering the global footprint that they have. And while they have a global footprint, they have their documentation in place, which is like their transfer pricing policies,
Correct.
their local file, master file for the respective regions. So now, do they still need to do certain things considering the UAE operations? Do they need to devise a new policy considering UAE, or they can use the existing the global policy in this context?
I was almost expecting this question, because the TP guide, when it was released in October 23, most of the clients and even the consultants were expecting something around this kind of area to be touched upon by the FT authorities. And to our expectations, the FT authorities have not disappointed us, and they've bring out a very important clarification that if you are forming part of an M&E group, wherein your M&E group or an ultimate parent entity is already having a group-wide TP policy catering into the similar related party transaction, then the UAE taxable person in UAE can also place a reliance on that group M&E TP policy, provided we need to make sure that the two conditions are met. First is that similar transactions and similar arrangement between the UAE taxable person are being undertaken while placing reliance on that group M&E TP policy. And second, that group M&E TP policy or the arm's length pricing takes care into account the global, regional also, as well as the other region comparables into account. And we need to make sure that the comparables which FT authority as well as the UATP guide, which they have talked about, global, regional and other region, they are also catering to those similar kind of conditions and similar kind of fulfillment criteria. So only then I think the group M&E policy can be relied upon.
Which is quite interesting. I think that's important really,
Yes.
because just to avoid duplication of the work.
Yes.
So with respect to transfer pricing, you have seen so many businesses, you've done so many studies out there. I'm sure a lot of things that you've done. Which all the two critical transaction or three critical transaction, or I must say that I rephrase my question. How many different sort of transactions that you probably have seen in a normal course of business? Which are those transactions which people need to be aware about, that they need to benchmark?
First and foremost, I think one of the most important or critical related party transaction that every business needs to focus upon is the intra-group services, which as a very common we have seen in the UAE geography in the last couple of months when the UAE law came into picture. The intra-group services, why it is very important, because it takes care into account two things. Whether first we need to delineate a proper role between the employees who are carrying out those functions. We need to segregate and identify that which all activities are low value or high value. Low value intra-group services normally require a safe harbor OECD cost plus markup of 5%, which are generally like finance, IT, HR, admin, and operational support. But when it comes to high value or strategic management support, it is very important to differentiate those activities from your low value group intra-group services, and then clarify or delineate that what actually is the high value, which can be either group MD or a group CFO or a group finance director or some kind of procurement, purchasing, or sales and marketing. All these kind of functions are very important, and they come into the bracket of high value or strategic management support, which require more than 5% arm's length markup. And in our experience, we have seen generally the ranges to be in anywhere between 8 to 12%. We need to charge that markup and cross-charge the respective entities. Second most aspect in this particular transaction is the need benefit test, which needs to be in place, so that you can justify that why there was actually a need for those services, what was the benefit derived by the group entities which received those services from the service provider, and how you have actually documented everything, the role, conduct, arm's length mechanism, allocation key is the very important picture when you allocate the cost, and how you derive the arm's length mechanism and arm's length profit markup.
I think this is really very deep detail aspect. So to all my viewers, I would like to say one thing, that transfer pricing is very detailed, lengthy and document oriented process, and I will recommend that each one of you need to look into your specific transactions and analyze it more thoroughly, because this is, as Mankush rightly mentioned, about the backbone for your supporting towards substantiating the fact that you're maintaining the arm's length principle while following the transaction with the related parties. So with that note, I would like to thank each one of you for viewing the podcast, and continue to stay tuned with us for more podcasts, because the next topic we're talking about economic substance, how it integrates along with corporate tax and transfer pricing, because this is something very phenomenally important topic which we uncover, and we would like to discuss that along with you in our next podcast. Thank you so much for viewing us.
Thank you.